Right, okay, that's our cue. Welcome, everybody, wherever you are in the world, to another episode of Trader Cafe. This is a show where we interview people from the world of trading to help learn what motivates them and what drives them to succeed. So during this series, we are going to be talking to traders, market observers, market analysts to try and bring you some insights as to how to go about improving your trading edge. And the good news is we're actually going to be today interviewing Ainsley Clubb, not the dog. So although clearly the dog would like to have a piece of this. So look, just before we get started, a quick note about the prize and offer today. As usual, I have persuaded Paul to give away 2 weeks of access to my broadcast group to a lucky listener, and we will spin the wheel at the end of the show, the exciting Wheel of Fortune. I actually want my name on there because it's amazing. I really like it. So our guest today is Ainsley Clubb. Ainsley is based in the amazing city of Australia. You might be able to tell that from the small background that she has there of the Harbour Bridge and the Opera House, which is a truly amazing place, especially during Vivid Week. And Ainsley's been a trader for a number of years now with Actions to Wealth and with other organisations. She's a great friend of mine. I really appreciate the disciplined and actually the way that she brings quite a lot of focus to trading. And tonight we're going to hopefully find a little bit more about what that means. So Ainsley, welcome on the show.
Thank you.
And
good to be here.
I think for the benefit of listeners, so the theme of today, everybody, the theme of today is Ainsley's journey from private trader, so starting out private trader towards more of a professional money manager, and what that feels like, what it means, pitfalls, strengths, good times, bad times. We'll hopefully try and cover all of that. And we have a special today because we have a few extra minutes. So I'm going to stop talking very soon and ask Ainsley the first question, which is, how did you get started in trading?
Okay, well, happy Anzac Day as well, by the way, because it's Anzac Day.
Thank you very much for remembering to mention that.
Yes, a very important day, Australia, New Zealand Army Corps, and Max is really excited. Max is my dog. This is about as active as he's ever been. He's normally, when I'm on the air, he's normally so loud, his snoring can be heard. But anyway, tonight, that's not the case. Shut the dog up, please, girls. Anyway,
Okay, the good news is this is for those of you that are viewing the pre-recorded session on Monday afternoon or something like that, we'll cut this bit out, so don't worry about it.
I know that's an absolute utter lie. Anyway, that dog's about to lose a tongue. How did I get into trading? I got into trading, and it was simple as I had children, and I'd previously owned a real estate office, which was 6-7 days a week, full on. And once I had my first daughter, I just thought, I don't want to go back into this at all, ever. Because that was just before the internet was starting to get going as well. Lexi, my eldest, is now 14. So going back then, there were a lot of changes happening. And then I had my second one, and there was just no way I wanted to go back into owning a business and running a real estate office. And so I went full circle. I had been in finance before I went into property and having my own business. I was in finance with IBM, a little computer company, which should be a lot bigger, by the way, but it's not as big as Apple or any of the others that it should be. But anyway, that I digress. And so I got back into the finance department area of being able to do something I can do from home. And that was my main motivator. I was looking and quite driven to be able to do something I could do from home, because I didn't want to go back to work because I had 2 small children, and I didn't want to actually put my kids in childcare and let somebody else raise them. So that was for me a really big motivator, and I got going. Unfortunately, I was learning with a group that actually had strategies for which I'd paid that didn't actually work. So that was very, very unfortunate. But my big stroke of luck was I won a lucky door prize with this crowd that was an hour's coaching with you.
That's lucky.
That was my big luck. That was my big, okay, all right. And my hours coaching, which I can remember, it was 4 hours later, and I'm pleading with you to take me on as a student. And you're saying, oh, look, actually, I've just started working at this electricity company over here in New Zealand, and I don't have time or anything like that. I'm going, please, please, I really would like you to take me on as a coaching student. And you did. And that was, I had to do that Saturday mornings before you took the boys to football, which meant me getting up at 4:30 in the morning.
That's actually exactly what it was. I forget the football matches at crazy o'clock in the morning. You're right.
Yes.
You were very accommodating to.
I didn't have a choice, by the way.
But as you know, squeezing time in is quite hard, and I'm sure most of our listeners who have children know exactly where we're coming from in both regards. That you often pulled in 3 or 4 directions at once. I think the idea of Uber was born out of a frustrated middle-aged couple who clearly wanted to stop taking their kids to all the events that they got hooked into and would like somebody else to do it for them. And if that wasn't the case, and that was purely by accident, I don't think that. I think Uber was born definitely from a parent of young children. So great. So look, that was the start. So when you one of the things, hopefully, if I recall from those early days that we had together, was about I think I said, look, I'm not interested in making mini me's. What I'm interested in is people finding their own path. And do you want to just give the listeners maybe a bit of an overview about what you feel your trading edge is, and in terms of walking around the markets at the moment?
So for a year, what was it, maybe a year and a half of getting up at 4:30 in the morning, and then you finally saying to me, sorry, but I can't teach you anything more. At 4:30, not every morning, by the way, every Saturday. And one of the things, and I'll show you that I think the point of difference was, one, and you're very generous and you're very kind and very, 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 very patient with waiting for the penny to drop with a lot of the stuff. Was you said to me, I can show you how I trade. I can show you my strategy. I can show you where I go in. I can show you what indicators I look at. And I can show you what my entry, exit, and all the rest is. And which I thought was great. Oh, because this must work. And then you said, but if you want to be a really good trader, you're going to have to work all this out for yourself and what you see. So what you actually did was give me the tools to work out the methodology to be able to put my own trading strategy together that I look at, and added in things like, okay, how are you going to put the seasonals in? How are you going to put your scaling in to leverage what you're doing? And that's the difference. You can teach me the technicals, and God knows I went and did those exams and the assignments, and I'm a certified financial technician recognized by IFTA, and I've taken a pause on the masters. I'll go back to the masters in a couple of months, but I can do all of that. I can express all of that. That's not a problem. But having the difference to following somebody's strategy, and that's great when you're starting out, but what you have to do is take that and build the blocks on which you can actually then have the methodology and the tools to develop your own strategy. And that's the big difference, is when it's your own and you understand exactly why you're going into that trade and what you're looking at, and because you've back tested it, because somebody maybe go back to the beginning of dot and space through every bar, and it's the most boring thing you will do in trading, but it's the best thing that you'll ever do in trading, because you'll never know otherwise how certain currency pairs move and what makes them move and how you can see that coming up and understanding that. And as time consuming, but you have to do it. If you're going to be good at something, you've got to do it. You've got to put the work in. Otherwise, it's you're just flying blind half the time. But
and
yeah,
I think that's
methodology.
exactly. And look, and that's a point that I'm hearing from a lot of the guests on the show is different styles, different approaches, different ways of possibly thinking about how their journey has started and where it's come from. And I think pretty much everybody's had a different start in terms of where their trading journeys come from. But the similarities between the traders is remarkable when you actually listen to when people are talking. Yeah, it is. And look, I think people need to find their personality, right? And I think we're all different. You're different to me, I'm different to Jeff and to Ash and the other Alexis and Lloyd as well too. And when they've come on the show, and I think that's actually a really good thing. And it sort of proves my point that I think you can give three people the same trading system and you get three completely different results. Some of it's about risk management, some of it's about taking the right trade, some of it's about getting out, whatever, right? So, but the key point is, right, the key point is give people something that's reasonably successful and see what happens, because there's some magic that occurs at some point, right, as people get it. And I think that's the key thing. Right?
It took a while with me, but because I remember when I first came to you and the look of disappointment on your face, and you was like, well, how are you trading? You said, and I said, oh, I'm looking at 5 minute or 1 hour chart, and you're just like, anyway, as we worked out with 2 little kids and what I was trying to do, it didn't suit, 1, my lifestyle, and 2, my personality at all. And I was looking for a bigger picture, and I couldn't do that because it just wasn't working. And I was in, and this is a term that I use a lot because I've worked out how true it is. I was feeding the broker. And I personally have a personal vendetta about feeding a broker, making them rich out of, because they clip the ticket either way, right? They clip it once you go in and once you go out, and that's they don't care whether you make money or not. And I've met a couple of brokers, and I really don't want them being rich.
I'm struggling to. I don't know how to. Yes, I'm just going to go. Yeah, and
just run with that.
Yeah, exactly. And look, I think, when you think about this, so in terms of fitting into to your lifestyle, right? This is actually part of it. So
really important.
So what sort of time frames do you feel the most important to you?
To me, and if anybody's seen my charts up on a weekend when I'm doing TTR, it's 4 hourly, daily, weekly, monthly. And I'm looking at the daily. I enter on a 4 hourly, but do that weekly, and the monthly overtones as far as the bigger picture goes is really, really important. So that is, I might drop down to a 1 hourly to see the skeleton of a 4 hourly chart just to see what had happened there. But I'm not trading a 1 hourly chart. I don't trade 1 hourly charts. I trade the 4 hourly, which means that I'm going in looking for an earlier entry on a bigger move that you would see on a daily. So I just want to get in and get that move.
Cool. And I think that's actually really important. And this is what I said about the personality and what works for you, right? I think everybody out there has to, if there's a key lesson that I think, that you've just highlighted there, is the fact that people have to find out what works for them. If you have a very, very busy lifestyle, you can still be a successful trader looking at a weekly chart. You have to size your risk correctly, and you've got to think about what your returns may be with that. But you've also end up being a lot more patient as well too, because you just, things are going to come along at some point in time, and you can wait for them. And you've got a week to find out if they're wrong, because essentially most people who trade a weekly chart, their stop is going to be somewhere near the week's low of the previous week, right? Which means you usually have quite a bit of fair distance to go, and most of the time you're not going to get hit on it. So it's a lot of waiting. And
it is a lot of waiting. And I've got to say, when I first started trading, I wasn't the most, look, my personality is not quite the most patient with people. And I thought, I really chilled when I had kids. I thought I was so patient. And then I started trading, and coming from a marketing background with real estate and talking to people a lot, I realized even talking to a screen when the market was going the wrong way, it didn't talk back to me.
I keep trying, and no, remarkably, they don't seem to answer back.
Just like, what are you doing? And it didn't listen to me. I had to learn to be patient. I had to learn to be disciplined if I was going to be in this long term. And it's a struggle. It's hard, and you've got to get your head around it. And it's like, okay, I'm going to go to the gym every day, or I'm going to go every second day. If you don't do it, you're going to end up a little bit of a roly-poly, aren't you? So you just got to do it. You've got to be patient. And if you feel trigger happy, you've got to have the discipline to get up and walk away from the computer. It's not going to make any more money. You've got to have that discipline to walk away.
And I think that's actually quite a key point. And look, I think we all are trying to find that space, that exact right space. I don't think there's a single trader out there. There's a lot of people who say that they're finely balanced and they're perfectly fine and have the ability to walk away. But I guarantee you that doesn't apply to 99.9% of even the most successful traders. Everybody is it's quite hard to switch off, especially if you're carrying big risk. You want things to work out. And you're gonna carry that. Now, whether the ability to go, I'll just switch the screen off, and if my stop gets hit and everything, that's a nice thing to say. To do, more tricky.
So it's harder. In theory, sounds great, and it's harder to get in the car and go down to the gym, isn't it? But I avoided that by putting my treadmill behind me here in my study, so it stares me in the face. I've got to get on it. So.
I have to be careful here because for me, Jim is still a bloke's name, and Anyway, moving on from that, which I think is probably fairly good quickly. So when you talk about, allocating time, right, and allocating time effectively. Can you talk us through, do you have like a daily process that you go through? What does that look like?
Up, kids out the door, get them to school. Coffee, do not talk to me before coffee, and I sit in front of the charts. I go through what's happened overnight. I am then looking for, I'll scan news items, I'll see what's coming up, go through overnight news that could have made something move. But that is, I'm back at my desk after I've done the school run, got the kids out of the way, and I've got the very important mug of coffee. But just scan the headlines, go through the charts, look at what's setting up, and then I'll ping it on a Monday morning, particularly because I'm really careful about going in on a Monday morning until London and New York have opened to absorb anything that's happened over the weekend, because that's the bigger volume, they're the bigger markets, and you want those open to see, well, are they going to reverse what's happened through the Asian session? Once that's up and running, you're pretty right for the week, and you can keep an eye on things and track things as they go during the day. But in the morning, then I'll go off and do what I need to do during the day, and go for a run, go for a walk, washing. I'm always washing. Always washing.
So maybe just to reiterate this, so you have the great advantage in Australia that I guess, to your point about early mornings, right? Early mornings for you is actually after the market in the States has just closed, so that provides you with quite a good time frame. Because you then have that end of day perspective that you can apply to things straight away, rather than say waiting till 5 or 7 or 10 o'clock at night. Now
we don't have to worry about that. So where we are, it's done, and you're processing that information, and then probably back into it around 4 o'clock, which is European open, before 5, and 5 o'clock's London for me. 5 p.m. here is London open, and so it just works timing wise. Then go feed the natives, and as long as they're fed and the dog's fed, and all is quiet and happy, and then it's back in to keep keep an eye on. And I always keep one of the things that I've always done is subscribe to Bloomberg, and just having that on in the background, and I don't know, osmosis, subconsciously just keeping up with the news that's happening. And it's not necessarily I hear, although I do lie, because there have been a couple of times there's been news flashes, or something's come across the line of breaking news, and somebody's being interviewed, like an oil energy minister for a country, and they're not going to comply, and they're going to be different. You can see oil dropping, and I've jumped on that and I've made money, and then it was, oh no, we've all come to an agreement, and then you can see it going back up, and I've jumped on that on the way back up. So those kind of things, trading the news, and it's not necessarily a strategy. It's just, it's there, I'm hearing it, I'm looking at it at the same time, and just putting it together because I'm hearing what I'm seeing. So it's right place.
All right. So hang on, that's quite a key point that you just mentioned there. So what you're saying is that you're taking the news, and if you're getting confirmation from the price action that supports where you're thinking, and I guess the flip side of that would be if you see people talking, all the talking heads on the show, and the market's going in the opposite direction, then that's also an interesting signal for you as well too.
It is. I mean, you don't believe everything you hear, but I mean, I'm talking specifically breaking news, or things that will impact what you're looking at. So
Yep.
a couple of the commodities that I trade, obviously gold and oil, will be, and oil particularly, it's really fickle, very fickle at the moment, with the fundamentals as per excuse me, very, very fundamentally based, and it will be moving very, very quickly. Whereas gold, not so much. But last year it moved really quickly with some stuff as well. Especially when they announced COVID vaccine, which was the first one. I think it was the Pfizer one that came off, and gold dropped. It dropped like a stone, and on that news, and I saw it starting to move. I saw the news on Bloomberg, and I could see it happening, and it was flipping around all over the place. And for a better of term, and I would not ever want to be called a scalper trader, but I was trying to trade that news because it plummeted quite substantially. But
yeah, so sort of picking up on that then, theme-wise, where do you think we're at today then with gold? Because obviously we've had 4 months, 5 months. Do you know what? It's really hard to try and get an angle on how time goes by. But I think we could probably say maybe even 6 or 7 months of gold going down. I know it valued to over 2100, 2200, something like that.
Didn't make it to 2200.
I sort of vaguely remember roughly where gold got up to, but it was so far away from the cost of making gold that, and I have a little bit of a view on that. Maybe we can explore that in a minute. But with the cost of gold at $1,100, right, somewhere between $1,000 and $1,100 is the all-in, sustained cost of gold. Then you look at that and you go, okay, 2,100, and even I was scratching my head, going, I sort of get the reasons why it's going up. The world's on fire. We got maybe inflation's coming, but maybe it is, maybe it isn't. Who knows? But the world's on fire, right? And gold normally performs quite well when the world's on fire because people run to safety. And at that point, it was seen as being a store of future value, not necessarily a store of value today, but a store of future value. Now, over time, I think, as the expression goes, it becomes an investment position rather than anything else, because it started to go down and then down and down and down, which
went down.
Sort of.
Yeah.
Look, it does, and I think for my 2 cents on this, and please comment on this in a second. But we saw an incredible run up, which demanded a massive premium against the cost of making it. There was clearly a lot of investors, a lot of central banks were increasing holdings, investors were increasing holdings. It was hot. Gets on CNBC every day in Fast Money. People are talking about their gold positions, and then nothing. And then I think it was around about the time of that vaccine hit. Let's say it was around about September. I can't remember the exact date, guys. You probably have a better idea of this than I do. But when the news began to fall away that was going to make gold continue to go higher, it just fell off the radar screen of everybody, and then it became a Bitcoin story or a GameStop story, and all of the the shenanigans that went on with markets from September, October, right, and the massive rally that we saw. But gold didn't participate in any of that, and I just worry that it got so far ahead of where the cost of making it is that it acted like a bit of a magnet, and it just comes back to that. There's always your, with gold especially, there's your break even point. But $1,000 is a long way from where people were buying it, right, at 2,000, and so that's a massive loss, right? So maybe you have some thoughts on that. It'd be great to hear them.
Yeah, so what we're looking at on a gold chart at the moment, we've gone through a double bottom. Let's tap that, and we've moved up. There's been a lower high, and we've now broken the neck of that double bottom. Friday saw us have a pullback. At the moment, I think the gold story is very much yields, treasury bond yield rate based. We've had a lot in the mix as far as, I don't know, you could say, well, the Bitcoin story, the GameStop story, and a few other stories, and things looked a lot shinier and moved a lot faster and offered far better returns than gold did after it had that huge pullback in January. It had the massive pullback in August, September from the 2100 area, as you said. We had a rally up through from the end of November, 27th of November. It went early, and then a bit of a dip, and then again on the 16th of December, it hit on a seasonal. It was just seasonal. It was just seasonally perfect chart. And then we had this massive pullback on the third trading day of January this year, and it just dropped. But it dropped far more harshly than a lot of people expected. We expected, and it was the Georgia elections, Georgia state elections as well, and that combined, and it definitely didn't go the way, even though it was a positive. It was a Democratic win compared to a Republican win, and people thought if it was a Republican win, gold will continue on its way and keep going up like it would normally do to February, and it didn't. And it was a Republican win, a Democratic win, not a Republican win, and it went down. And then since then we've had so many other, would you call it not competing, but people have got X amount of money. Are they going to go into gold? Gold is oh yeah, it's always there. And I think what we're starting to see now is maybe there's Bitcoin's getting a little bit Bitcoin's volatile. Gold hasn't had that volatility. Gold is renowned for being there. It's renowned for being shiny, and you can pat it, backed by an asset, by the way, as opposed to some of that crypto stuff. And it's just, it hasn't taken hold, and it's always meant to be the anti-inflation story, and it's meant to be this, that, and the next thing. Has it done that this time? Not so much, but that's not to say that people won't go back to it. And I think what we're seeing now with a double bottom is and gold, as we say, it likes levels. It will go check a level and then come back and test it and move on. Whether it's going to go to, and I know if anybody sees me on TTR, I actually referred to, and on Trading Buddies with Ash and Jeff, was on the weekly chart. There's a massive bull flag on the weekly chart, and we've now just got to the top side of that channel on the weekly chart, and whether that's actually going to break through and then keep going, because if it breaks through that channel and that whole gold pattern plays out, that's a big move. You're looking up closer to $3,000.
Yep.
So from a technical point of view, okay, we've got a bull channel. It was massive. We've got that. It breaks from a technical basis. Yeah, gee, would I love to write that one? But we'll see.
Yeah, can I think again with these things? So gold, people often ask me, go on, come on, look, you've got a digital currency. And you've got gold, and for a time they moved in lockstep together. Well, I'll actually sort of refute that. For a time, pretty much everything moved in lockstep together. I'm not necessarily sure there was anything in the world that went down in value towards the end of last year. So apart from cash, and pretty much everything else did incredibly well, right? And gold sort of didn't really take part in that. But to your point, it's sort of a little boring, and I think when you have this debate about crypto versus gold, it's crypto is new, it's incredibly volatile, it's in my mind fragmented. There's Bitcoin, there's Ethereum, which I guess is the benchmark, and you've also got all of the other ones.
Coin.
Yeah, when you say all of the other ones, there's many other coins, and there's more coming, every month, right? So it sort of is trying to find its home, and it hasn't quite found it yet. And I think that's part of it. Whereas gold's been around for 2,000, 3,000 years, right? And yeah, is it a store of value? I think eventually it is. Is it held by all the central banks? I don't see many central banks announcing their holdings of Bitcoin or Ethereum just yet. That may well come in the future. So I think, but when you hear central banks as significant holders of gold, that's probably a reasonably good solid sign that you have an asset there that, in the end, probably won't depreciate against money, that's for sure. It'll have its moments from time to time, but it's sort of going to be around, and it is not a bad place to be if you need an alternative to cash. It sort of keeps its inflationary value. So I think that's one of the things for me that's really important about it. And when the market looks at gold, it looks at it as being one of these, a trusty old fellow, right?
Yes,
let's
shiny
call it like
and
that.
boring and all the rest of it. And at the moment, it's not as fast as Bitcoin, and it's not moving that way at the moment. But look, it's solid, it's reliable, and it will keep going. I believe it will keep going up in value. As you said, it's a store of value. It has been for 2,000 to 3,000 years. It's sort of proven its worth ish. Whereas Bitcoin's been around for how long? So 5 minutes ago.
And there it is. So it's got a lot of time to go. Maybe it's got a lot of room to go higher as well too. I'm not sure about those things, but who knows? We'll trade it as we see.
Nobody will know. But it's moved like a slug, I've got to say. And we've had a couple of months, and it wasn't even weeks. It was a couple of months of just consolidating and drifting. It sort of drifted down, and it wasn't a straight plunge. It was so it was tricky to trade, but at the moment it's got a bit more substance to it at the moment.
Yeah, and I think
coming through full circle on okay, gold's there. Gold's worked before. Gold did quite well last year. Gold is not as volatile as the speed demon that crypto is. Fast money, fast bucks.
And I think there's actually something else going on here, right? So when you look at this and you go, well, what asset markets are cheap and what's expensive? We sort of work on the basis that relatively everything is expensive at the moment. The reason why it's expensive is we had, falling interest rates for 20, 30 years, right? So unsurprisingly, borrowing money has been incredibly cheap and getting cheaper almost every single year. So why wouldn't assets appreciate? That seems a relatively sensible approach to me, up and down, but the track is clear, right? When you and I think what's been happening recently is that when you talk about the relative value of gold, so we've seen the last 3 months, to your point, since January, open interest has been falling, interest has been falling. Nobody's even looking at it, nobody's mentioning it, not on anybody's radar screen, boring. So therefore, in my mind, and maybe you can fill in the technical levels here, you've sort of, gold has become cheap because it's drifted slightly lower when other things it's compared against have been rallying, and for me, the technical levels seem to be 1750 is around about a really big technical level, and also on the downside, I guess 16, that double bottom we had at 1680, 1675.
Yeah, 1680. I think it was 1682 ish. But then we had the higher low. In the middle of that was about the 1735 mark, and that's where I went.
So what for you would be a close which would question the bull tack at the moment then?
If we went back down below that 1730 mark, at the moment it's just because it likes levels. Gold likes levels. If it closed below that 1730 mark, I think it would be back down. But that 1682-ish mark at the double bottom, it was well supported, and as soon as it hit there, bang, it took straight off again. So yeah, well, whether we see it back down at 1700, but it just depends on what's going on with yields and vaccines and moving out and stuff, and stop being so so subjective.
So what other markets are you looking at the moment as your key markets that you're operating in?
I've been keeping an eye on the S&P because once upon a time, if the S&P would rally, then gold would fall. And we actually had that correlation for about 8 hours on Friday night, which was so nice to see. In other times, we've had the S&P fall and gold fall at the same time. And I think that was at that point we saw the correlation break down, but the reality and the fundamentals behind that was that as S&P were falling and people were being margin called, they were selling assets. They were selling anything that had substance in order to cover positions on the S&P. So that's where, if one was going up and the other was going down, that inverse correlation just didn't apply. So you had both going, well, actually it was both going just down. It was going down, first floor, cosmetics. So it was just kaboom, those kind of things. But if you can understand, it's not going to be, well, a hard and fast rule. And this is where understanding what's going on in the market, keeping an ear on the news. You don't have to be a whiz technician on fundamentals and all the rest of it, but understanding how that actually impacts your markets is important. I hear of traders that say, I don't listen to the news, I don't care about news, I just look at a chart and it tells me everything. To me, that's fine to a point until you put a trade on, and then 5 minutes later, it goes flying. And I know in my early days, when I was trading a fairly large account early in, look, there have been a couple of times where I've actually just about fallen off the chair because my stop loss my target got hit, and within 30 seconds, had that trade not closed out, my stop loss would have been hit. And I would have been, I was trading large chunks of money and still getting my head used to trading large chunks of money. To see it go from here to here very quickly, that can terrify, I think, even the average seasoned trader. But yeah, things where news items are dumped in the market at times, some of them you just don't know they're coming. You and I have both been through the Euro Swissy pegging and unpegging. We've been through earthquakes and tsunamis and some really big national issues. Pandemic has been a more drawn out affair, as opposed to some of those very hard-hitting natural disasters or announcements or things like that. And no doubt there's more of those to come, but that's part of trading. It's part of what we do.
So I know that you look at oil markets as well too.
Yes.
Do you have a view on oil at the moment as well?
Oh, which day? At the beginning of the week, there were especially with what's happened in India and that second wave, and it's just obliterated their infrastructure and their ability to handle anything related to they're just overwhelmed. And can they keep up with things there? No, they're not. I mean, they're a huge population. Second wave, different strains, different variants. Well, even our travel bubble's been between Australia and New Zealand. So somebody caught it in hotel quarantine. And next thing you know, that border's been put. So from oil, looking at what's happening COVID-wise and lockdown-wise, and people look, and the oil market's a bit shaky about how quickly lockdown's happening. I think a lot of people thought once the vaccinations were happening, hey, there's light at the end of the tunnel and economic reform is happening and we're on our way. And that hasn't happened. So it's become very, very sensitive to major shutdowns, major major things that are happening, and like India, what's happening in India has put a big handbrake on that. Now, having said that, the next thing is Iran, and sanctions lifted and quotas lifted, and Iran's looking at being one of the largest OPEC producers coming up, which is interesting because they nearly really had an issue, as we all know. They had a small issue with overproduction and oversupply last year, about April, this time last year. So, we know that they want to come on board. We know that they want to pump because, one, labor's cheap. Two, they just need to get it out. But there is a problem that there is a not a problem, but it is a possibility that they may flood the market because they're so desperate to get their product out in the marketplace. So whilst OPEC have got a handle on that, that's a big black cloud. You put COVID here, you put Iran there, and we just can't, the world can't deal with an oversupply against a backdrop of countries that are going full tilt with carbon emission cutting and trying to be renewable. I mean, you look at the top 5 countries. I was looking at a report: Austria, Switzerland, Denmark. I've forgotten the other 2 now, but things
Norway.
like
Norway would be up there.
Norway, but one of the countries
the
is
UK's
actually
done a lot.
Yeah, you're looking at a country. Was it Denmark or Norway? It could have been one of the 2. Banning petrol cars by the sale of petrol cars by 2025. 4 years away. You can't buy a car and think that you're going to get any kind of return on that in 5 years' time. Banned.
Amazing, isn't it? The world's changing, right?
So the world's changing, and those demands will impact oil going forward, and how those oil companies evolved, stay ahead of the curve, who knows? At the moment, that's a really sharp transition. We always thought, next 30, 40 years, it's not going to happen. But when you start hearing the countries are starting to, okay, we're banning the sale of petrol cars in 5 years' time, that's a bit of a game changer. That's starting to really pull it all into perspective, isn't it?
It is. Hey, look, Ainsley, once again, we could sit here and we could rap for quite some time, and we've come to the end of our extended session together. So don't go, and please hold on. And thank you as always. You've been awesome about answering the questions, and hopefully the listeners have learned something. So if you hold on a second, we can do rapid fire questions, which are as equally important. To everybody's interest levels, but in the meantime, Mai, if you're there, would you mind some of the favourite bits of the show here? Mai, would you mind spinning the Wheel of Fortune? And I'm hoping that there's Julian, in fact, on that Wheel of Fortune, because I'm so excited about it. I'd love to have a crack at this one day, but I can see my name is once again absent from the list.
Well, is it a week with you? Is it?
It's actually 2 weeks of the broadcast group. So
second prize is 3 weeks of you.
Okay, some people call Ainsley a friend.
Sorry, guys. Yeah, no, we've known each other for look, PB, well done. Which Paul?
We need to work out which Paul that is, and I do believe that I think that may be Paul Chan. It could be a different one. Maybe hang on a second on the chat. Let's see if we've Paul P.
Paul P, can you confirm you're in the room? If you can just you've got 15 seconds to confirm you're in the room. You're still here. You've got to be in the room.
Yep.
Congratulations, Paul.
Congratulations.
That is awesome. Paul Bottle, I think you need to change your name going forward, because it creates lots of confusion. So thank you, everybody. Now, okay, quick, right, rapid fire questions. Are you ready?
Go.
Okay, which trader most influenced your trading?
You did.
Oh, okay. Awkward. Okay.
Move on.
Thank you. Moving on. Okay. What is one attribute that every trader should have?
Oh, look, I go back to discipline.
Cool. Favorite indicator in trading?
Oh, I've got two. Can I say two?
Of course you can.
ADX MACD.
Nice. Joe Biden, savior or caretaker?
Caretaker.
Everybody, who said savior? I think Ash might have said savior or something at one point.
Probably because it was right after the election and everybody just went, how long are we doing that?
It might have been early in the morning as well too. He wasn't really thinking. Crystal ball time.
Yes.
What price for Bitcoin in 1 year's time?
It's being recorded. I don't want to say. Oh, Bitcoin. I'm not. Oh, I know it's rapid fire, but I'm.
Got to press you to think of a number. We're running out of time. We're going to head into TTR soon, and Paul will get very grumpy with us.
15,000.
Oh, okay, interesting. About the price. That, everybody, by the way, for the record, is about what it costs to make a Bitcoin these days with supply chain and electricity prices. So somewhere between 12 and 15,000. So Ains is saying it's going back to cost. Sometimes that isn't actually an unreasonable guess. So last question. Are you ready? In a speed eating contest, what food, and you have to change the food from barley when we last did this, what food would you choose?
Do you know what's really easy to eat quickly? Lettuce.
Lettuce.
I'm sure Paul would love to have a competition with me on that one.
The good news is I'm not sure Paul can answer that question because we know that he's muted and he only popped in. That was actually a pre-recording when he came in just a couple of minutes ago saying it was Paul P. So he'll maybe be able to answer that question in more detail in TTR in a few minutes' time. For those of you who are watching the recorded version, you already know the answer to this. For those of you that are watching this live, in 10 minutes, 10 to 15 minutes, we're going to find out how Paul feels about speed eating lettuce. And that, folks, is a wrap for this time. Thank you very much, Ainsley. Thank you very much, Mai, for your, as always, fantastic support. And more importantly, if you have been, thank you very much for listening. Cheers, everybody. And we'll see you again soon.
See you later. Bye.